Imagine a home you want to spend the holidays in. Is it the home that you're currently in? Your home is such a big part of the memories you create with your family in this special time of year. The end of year also marks a looming deadline for many home buyers and sellers. Some people think that buying or selling a home around the holidays is not the best time to do a real estate transaction. But let me tell you something that took me a few years to learn but has changed how I invest. Wealthy people don't purchase things at the same time as everybody else. Savvy investors look for deals and they buy when the market is slightly down. This market could be a fantastic deal for both buyers and sellers. Around the holidays, we also see increased motivation because buyers and sellers want to close faster to keep ahead of that end of year deadline. There are more homes on the market to choose from right now. All you hear about is interest rates being up, but what you don't hear is that in a market like this, there are lots of benefits to being a homeowner right now. This is a great time to push for sellers to help you buy down your interest rates to lower your monthly mortgage payments. You're actually less likely to go up against multiple offers over asking price, meaning you have greater chance of getting into your dream home. Seller concessions are on the rise, as well as paying buyers' closing costs. Also, think about the tax benefits. If you're looking to buy or sell before the end of year, you should have a discussion with your CPA about what potential incentives you could get for interest rate buy downs or selling of an investment property before end of year. Destination desert is still very much a thing. Arizona is a strong attractor for businesses due to our economic policies. We are continuing to see industry growth here with large companies calling their desert their home. The Super Bowl is even going to be here next year. This steady stream of population growth is not a leading indicator for a market crash. Supply and demand, the two basic levers of economics, are always the strongest indicators to predict a crash. While markets will fluctuate, we simply have no evidence to show that we are headed in that direction. You might think that mortgage rates over 6% are a big problem, but the housing market has operated for many decades with rates over 6% without it causing a meltdown. I remember when anything below 8% was regarded as a cheap loan. Yes, demand will be much lower while rates are high, but the thing everyone has to fear most is an overabundance of supply. Right now, the evidence points the opposite way. New supply is tight and looks likely to remain that way for some time. Get an expert to help you do the math. It's all an equation. Prices are down, rates are up, but what does that mean for you? There is a strong overtone of fear, but this fear is not based on anything more solid than uncertainty. This calls for marketing skills and patience, not panic and freakish discounting. Keep calm and carry on.